the virus of rationality creeps in when constraints are put on people. Constraints, monetary constraints, are the ones that work really the best. I mean, there's other constraints, of course, political and so on, but the monetary constraints are the most efficient ones, because it's more like water, where we constrain people in particularly doing the right thing, which is relative to how they allocate their resources, how they allocate their labor, how they allocate their intellectual capital. And that leads overall to better outcomes. So I want to talk about this, inspired by Michael Saylor, who gave a presentation recently. I think it's a Bitcoin conference somewhere. I'll put the link in the show notes. He was talking about this in the conference, and in my opinion, yeah, he's a very good investor. He's a very savvy thinker, and a very clear thinker. He's a bit of a showman, of course. He has this Bitcoin flair around him, and sometimes he's caught in these religious wars about Bitcoin maximalism and all of that. But as a seasoned investor, I can tell he really understands investing very, very well. So he's for anybody who's studying finance and then wants to get into the business of investing, read his stuff, listen to him. He has a very keen and good and healthy way of actually talking about the subject of investing. And this is the subject of this episode. The purpose of this podcast is to give people a sense for what it feels like to run a hedge fund. And I think Saylor is a very good example of somebody you just want to listen to and learn from. Okay, this is not investment advice. I'm not telling you to follow his advice or any of that stuff. Just listen to him. Just listen to his arguments. Listen to his reasoning, and you will have a very healthy. I think you will have a very healthy approach towards investing. This is Not In Wrong podcast. It's September 19, 2024. This is Krim Delco for the day. The fund is up 7.8%. The market's up 1.8%. For the year, we are up 17%. The market's up 19.6%. We're underperforming by 2.6%. We had a large move in the market yesterday, a little bit down, but today highly up after the Fed decision to cut 50 basis points, which in my opinion is driven by the really lackluster performance of the economy. People are saying that Jay Powell is doing this because of the election and all that stuff, and I don't even want to get into that conversation, because I think monetary policy is so convoluted at this point that you can't even even if they wanted to influence elections, I think they wouldn't even know how to do that. So we had a large revision in jobs numbers about a month and a half ago. Basically, last year we created almost no jobs, and the economy just feels like a recession, because there is just still a lot of inflation in the market. There's a lot of influence by the government. Housing is expensive. There is some bottlenecks in the economy. They, in my opinion, need to be fixed before we can have real growth. We believe that a win by Trump and a reduction of government deficits and a reduction of the deep state would be the most efficient way to get the economy back on track. Unfortunately, if he doesn't win, it could also go the other way around, where we have a continuation of this cultural revolution that we're going through since COVID, and that will be very harmful for the economy. So this is kind of where we stand now. The way to invest in this, of course, is to do. You can do two things, right? You can think about what are the political risks in the market, and conclude that they're very high given the polarization that the country is in right now, and that there is really no other way than just the continuous printing of money, which is kind of what Michael Saylor is arguing. Before I go into what he's saying, I just want to finish our prelude here about the market. So you can look at it, again, you can look at it in two ways. You can say, look, the market is going to just keep expanding. The monetary base is going to keep expanding by 7% a year. And that's kind of roughly what the S&P should be doing, maybe plus minus. You put a bit of leverage in there, you have some dividends, you have some innovations, maybe you can do 10 to 12%. Gold and real estate and art and all these other markets will do roughly what the monetary base is doing in terms of expansion. And that's about it. So then now let's talk about Michael Saylor. Okay, what is Michael Saylor actually saying? Now, he's saying that there is a fundamental shift, a generational, almost millennial shift with Bitcoin. So Bitcoin is a much, much bigger deal than just some sort of cryptocurrency, bullshit that is being floating around, which it is part of. There's a lot of crypto here, crypto there, conferences, hackers, all that stuff. And to some extent, that's justified because it's a new technology. Web3 is a new technology, in my opinion, looking for use cases, but it's a good technology and it's interesting. But Bitcoin as a money is much, 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 much more interesting than anything else that I've seen as far as Web3 and all that stuff is concerned, because it is a rule-based, electronic, cryptographically designed, trustless, decentralized, non-authoritarian, non-coercive type of money. So that's really, really interesting. And what Saylor is saying is, given that we have the potential to basically move a lot of assets, a lot of wealth, a lot of global wealth is going to move into Bitcoin, and that's going to drive up the price of Bitcoin as measured by other means, either paper money or real estate or whatever. In other words, if today you can buy, let's say, at $60,000 per Bitcoin, one Bitcoin buys you, I don't know, let's say I live in Los Altos, the average house in Los Altos is $6 million. So you have 100 Bitcoins buy you a house. And what he's saying is that over the years, that price will continue to decline. So you will pay less and less Bitcoins for a house. Now, that will be driven by the depreciation of the dollar relative to Bitcoin. And that will be also driven by the fact that more and more people hold Bitcoin, and therefore it will be more scarce, and it will become more scarce than a house, and therefore you have to give less of it to get that house. So no matter how you look at it, demand and supply, basic economics, Bitcoin is going to appreciate relative to any other asset. This is the fundamental idea. Now, how much that will be in terms of percent, that is, in my opinion, almost irrelevant, because you're going to be wrong about this. It could be 50% per annum, it could be 5%, we don't know. Now, we can put some limits, like, there's probably some sort of Heisenberg limit in terms of how much this can be before you start changing the system. So in other words, if Bitcoin appreciates 100% per year for the next 20 years, we're probably going to end up in a civil war much earlier and destroy ourselves. But the idea to hold Bitcoin is, the more you think about it, the more it makes sense, because it's a very good way to establish independence relative to proliferate spending of governments. And unfortunately, that's where liberal democracies have embarked on. Totalitarian states have always been on that trajectory, whether it's China or North Korea or Russia. They've always spent a lot more money for the states in quote unquote needs than they've spent on the people. And what Bitcoin gives is the opportunity for the people to take some of the power of access to money and disposability of money back into their own hands. Now, I'm going to put some caveats on this a bit later. I mean, I think the libertarian approach to Bitcoin is, in my opinion, neglecting some of the fundamental, drawbacks that freedom and libertarianism has. But let's put that aside. Let's talk about the monetary aspect. So what Saylor is saying is that, in a nutshell, he's saying that just relative to any other asset, Bitcoin will appreciate, therefore it will become a store of value. Because the store of value, the purpose of a store of value has always been and will always be to save. Like, and what are you saving for? You're saving for college, you're saving for a house, you're saving for things like that. And you know, the average college tuition today is 1 Bitcoin per year. So it costs 4 Bitcoin to get a college degree. It costs roughly 4 Bitcoin a year. 4 Bitcoin to get a college degree. And it's probably gonna be less, much less, again, depending on the appreciation you assume for Bitcoin. It's, conceivable that the price, let's say, if you have a child today, it will probably cost 1 Bitcoin or half a Bitcoin or even less to get a college degree when she is 18. And that's why you should save in Bitcoin, right? If you buy Bitcoin today, it costs you 4 Bitcoin to get a college degree. And then you can have 3.5 Bitcoin for other purposes and only spend half a Bitcoin for a college degree. Then that is a good way to save your money. Saylor is saying some other interesting things. For example, if you have a place you can save, such as Bitcoin, then you don't need to keep investing in the market. So in other words, the markets will not become just a means to avoid inflation, which a lot of investment today is not really. I mean, most people don't want to be investors, right? Most people actually see themselves as doctors and lawyers and artists and athletes, and not as investors. But they have to think about investing because their monies are being depreciated. How are the monies being depreciated? By fiat money, and fiat money is just one way to depreciate money. I mean, there's been the money depreciation ever since humans exist, or ever since money exists, particularly when it's centralized in an authority. What are the ways to depreciate money? Well, one is inflation. You can do that with fiat money. You can debase a currency like the last Roman emperors did before the Republic collapsed. Rome did before the Republic collapsed. Was it the Empire? I forgot. Anyway, one of those, they started depreciating the currency by debasing the coins. But of course, you can also just tax people or take their property away. I mean, that's confiscation can happen through inflation, threat taxation, or physical misappropriation of assets. So that has always been the case. And what's good about Bitcoin is that you can, in the extreme, store the value of your Bitcoin in your head. So of course you can be still tortured and killed, but at the limit, it is virtually impossible to take the money away from people unless you incarcerate them and force them to give away the codes of cold stored Bitcoin. So therefore there is a certain power. And if we take a little bit of a broader view, if we think about sort of the history and global history, and we think about it from a perspective of available technologies, and we say, for example, the invention of gunpowder and muskets really was the beginning of liberty, because when everybody has access to a gun, the governments are limited in what they can do. And the same could be applied to Bitcoin, right? When everybody has the ability to keep the money away from central authorities, then there is a case to be made for rationality to prevail. Because if money becomes scarce for the government, they will spend less of it. This is the fundamental thesis that I take away from Michael Saylor. Now, we are already discussing the efficiency of government in this election cycle with Trump and Musk and Vivek and others, and of course Ron Paul and the libertarians have always been, sort of drumming that beat, which is we need to reduce government spending, reduce the deep state, reduce the waste in government in order to have a more flourishing economy. Now, with Bitcoin, rationality can prevail. The virus of rationality can spread across the country and become a much, much stronger force. I've made that argument in several of my essays where I ask myself, imagine you split the US, or imagine Texas exits the Union and appoints Bitcoin as a currency. And then 40 years from now, you have Texas versus, let's say, Massachusetts, which does the same thing, and they keep the Fed and all that. Let's say the Northeast becomes its own country and Texas becomes its own country, and the Northeast adopts the dollar and Texas adopts Bitcoin. I guarantee you that 40 years from now, Texas will be a much, much, much more flourishing economy than the Northeast, assuming everything else similar or equal, the institutions, checks and balances. I mean, that's the reason why we don't make that same prediction with, let's say, El Salvador. It's not because they did apply Bitcoin as a standard there, but the country just doesn't have the institutional capital to really proliferate itself into an economic force. But Texas has, so does the Northeast, but just the money itself will spread rationality across Texas, and less rationality if, assuming the Northeast keeps the dollar, and the money wasting will continue there. And what I mean with money wasting is, like, you have, let's say, if you listen to the narrative of the Democrats, particularly Kamala Harris and her campaign, it is all about confiscating money and then redistributing it somewhere to somebody, of course, also to themselves. It is appalling. It is very un-American, as sort of going back to the founding fathers and the Constitution of the United States, to misappropriate funds, to take away from individuals and give it to whoever you decide deserves it. That is a very, very dangerous path, and can best be prevented with something like Bitcoin. So to summarize, I think Michael Saylor has a very healthy argument for a rule-based electronic money, which he calls electronic energy, and that's true. It is, money is energy, it's stored energy. If you save money today, you can release it tomorrow and do something with it, whether it's you can invest money or capital and so on and so forth. The point here is, the fundamental idea is really the following, that if you want to have a store of energy in terms of money, you have to make sure that that money doesn't depreciate. The same way, if you want to have a store of energy, like in a battery, you don't want the battery to leak. And you achieve that by having a rule-based electronic system like Bitcoin. And therefore, Bitcoin is a very, very interesting asset class on its own. Thank you.